Hello, this is Will. Today is December 12th. People said in 2020, we're gonna more return from the growth to the Russell 2000 and value stocks and emerging market. Let's see the article together. So this one is the by the Steve is working in London. And this one is the one big reason growth stocks have outperformed over the last decades is about to change. So that we'll see now. Okay, this okay. First thing is like this. When you see the S&P 500 growth, it was in November. It it was up 9.58%, and S&P 500 value it shows 12% up. Russell 2000 18% up. So which means the value stocks show up more than growth, and then Russell 2000 shows more up than the value. And then emerging market usually not that high or go to sideways, but in November it shows over 7 point up. And okay, and then here um, from the November 2010 to November 2020, so it means the 10 years, S&P 500 value stocks, it go up to 190% up. In that time, Russell 2000 shows 187 gained. But think about the S&P 500 growth. It go up 365%. So it's about 170% more gain than any other sectors. But how about from 2021? So it says about the 2021. Okay, let me read this first. And before we see the 2021, we need to know about this one first. The nominal GDP growth. Nominal GDP means it means the GDP plus inflation. So the GDP plus inflation means the nominal GDP. So nominal GDP is below 4%, like this year, 2020. Then gross minus value is 4.9%, which means the gross stock is about 5% more gain than value. Compared to the nominal GDP growth is over 4%, not much difference. So, okay, let's see the one side first. So, when the nominal GDP growth is less than 4%, growth stock is about 5% more up than the value, and then growth stock more up than small cap, about it's 3.9%, and growth stock is the more than emerging stocks 4.3%. But in the case of the more than 4%, the nominal GDP growth is at that time the growth and value not much difference. But as you know, the value stocks has a dividend, so that means the dividends match, the amount match, they have some the more returns, and then the growth minus small caps, that minus one means the small cap is the 1% more up in this case, and growth minus emerging is the minus 5.9, means the emerging market they gain about it's up more than 5.9%. So when like this year, like 20, in this case, so the growth stock is more attractive, but from 2021, the economics recover again, and then the GDP grows again, and inflation go up. Then, as you see, the emerging market is better, and then second is the small cap. Last one is the value stocks or with the dividends. So that's the says. Okay, last one is the we can expect how much percent inflation we're gonna see 2021. So the let me see. Okay, erase this one first. Okay, when you see that this one is the blue line is the shipping price in Shanghai. So and then producer price is the OECD producer price. So as you know, the 2020, our economic cycle going down because of the pandemic. So it's the price produce plus line way down deep, and then it recovering. But before it recovering to the zero level, above zero level, the shipping price is already showing high. I mean, shooting high. So it's about 50% level now. So easy to calculate. So let's just say that this one go up to 60. Okay, next year, that means 2021. So each time the shipping price to go up about the 15%, that means the GDP, inflation is go up 1%. So it goes go up to 60%, means the inflation is about 0.4% up. So the it increased boosting more inflation. And then as you see here, the produce price is going up, and then the probably next year go up to the plus side. That means that we're gonna see the inflation, which means the probably expecting the nominal GDP around 4% or more than 4%. So that means we need the more invest to the from growth to the value, small cap, and emerging market. That's all today. Thank you. Love once more. Thank you twice.